As you know, I rarely have guests on this program, but my following guest has been on this program more than anybody else by far. In 21 years, I imagine he's been on at least once a year, and he's a great guest to have. Every time he's on, I get tremendous amount of emails and people saying how great that program was and how smart this guy is, and they really enjoy having him on. His name's Peter Grandich. Peter, how are you?
Great. You know how long it takes me to make up all those names to send you those emails to tell you how great I am?
Yeah, you have different email address. Actually, it's the same email address. I think it keeps coming from. Anyway, how you doing today, Pete? Thanks for joining us.
As always, Lou, it's a pleasure, and it's you like to say when we do these things, I gave you a start, but you went way beyond me, and it's just phenomenal what you've done here, and this is a great, great program. I'm honored to be here.
Well, just talk a little bit about our history. You and I were talking before we got into the studio. We've known each other, how long was it?
35 years.
35 years.
AFM Investments was without a doubt my favorite place that I ever worked, including having my own business and all. And we were talking about when we did live television, when we both started first in the media, and we went going in, someone told a joke, and we both couldn't stop laughing. They literally showed that show with us in the first 3 minutes just laughing. So we won't have that today, but...
Do you remember the joke? I don't remember the joke.
No, it was a guest that if we had, remember, we were co-hosting, and they went live. There was just no way around it. So
yeah. So anyway,
so there is a positive of you recording a show now. So
yeah, we don't have to worry about that. Yeah, Pete and I go way back. Pete was the chief market strategist at AFM back in the 90s. Was it 90s, right? Early 90s or late
1988 to 1993.
Yeah, wow. And he was chief market strategist at other big firms, and he's since become a very prolific personal investor in the markets, and he always has great opinions on not only the markets and finance and the economy, but also on our culture and the values of our country. So we're going to touch on all these things on the program. Now, the last time you were on, I guess it was, about 8 months ago?
The fall of
last year. We were discussing what we thought was going to be a very, very dangerous time in the world, in the economy, and for the country. And boy, were we right.
Yeah. So I had brought up to you the fact that my plan was, which was fulfilled, that before the end of 2021, that cash was going to be my largest personal position. That we both concurred that the greatest financial bubble had reached its peak, and we were both looking for it to come down hard in this year. And by golly, as we sit here on the first trading day of May, as we record this, it has.
And that's it. We're recording this program on May 2nd, 2 weeks before it airs. So there's going to a lot of things happen in 2 weeks in the markets, in the world. So if we're not touching on those things, that's because we're doing it 2 weeks in advance, because that was when your availability was. So let's start with stocks. After a ridiculous bull market that's lasted so long, and valuations got so high, we're seeing the worst start to a year for stocks and bonds in 40 years?
Yeah, Lou, so the way I like to describe, because we were talking on the way over here, that you actually started in the business a year before I did. And in the early 1980s, if people, almost 2/3 of the people now licensed to give financial advice have been in the business only since the last financial crisis, and less than a third are in the business since before the new millennium started. And the reason I bring that up, not because a year ago the young folks were calling us guys like dinosaur that were in the business 40 years and they knew everything.
We are dinosaurs.
Yeah, but dinosaurs with experience. And the bottom line I bring that up is, if you can recall back in the early 80s, the stock market had really traded for 3 decades between 700 and 1,000 on the Dow. Interest rates had hit 20%. Inflation was double digit. Japan was going to take over the world, not China at that point. And there was a famous Business Week article where ran on the front page and said equities are dead. And then this unknown newsletter guy came out of Gainesville, Georgia, named Robert Prechter Jr. and predicted 3,700 on the Dow. And people said, 3,700? It's traded between 700 and 1,000 for 30 years. And, of course, not only did that happen, it went a lot higher. And the reason I bring that up is it felt last fall that we had become 180 degrees opposite of that. Everybody had the opposite thinking. Stocks can't miss. They always go up. If something goes wrong, the Fed comes in. We had guys that were 22 years old, internet guru sensations, picking all these technology things and meme stocks and all, when just before that, the toughest problem they ever handled was algebra in high school just a couple of years before that. And so the bottom line was we've had a tremendous change. Now, of course, there's still a belief as we speak that this will just be another, down, but it'll be back. But I think things have changed a lot. I think they changed, and I'm sure you'll want to discuss it on the world stage, what's happening as we speak, politically, but most importantly, the tremendous inflation and shortages of things to come. This is not going away anytime soon. This is an issue that's going to go on long past the next few months. And with that, even if the Fed does decide to eventually cave and stop raising interest rates, I think there's enough issues now to suggest that we probably at our age probably seen the best of bull markets for our rest whatever our natural life would be. I don't think this is going to get back like it was and just continue to go back to old highs.
Well, the reason why the stock market went to bubble levels was the Fed's liquidity. The Fed was printing money to the tune of $120 billion a month of their quantitative easing. They kept interest rates at zero. So now they're raising interest rates. They're not printing money, or at least they say they're not, and they're doing quantitative tightening soon, which means they're going to be selling bonds into the market. So if the opposite is what they're doing now, is the opposite of the market going up, well, you take the punch bowl away. Stocks have to go to fair valuations. And many analysts are saying fair valuations on the Dow is like 50% lower than it is today.
Well, we already seen that in some sectors. If you look at some of the things that were highly touted a year or two ago in the NASDAQ, and some big names too, not some just $2 stocks that went to 10 or 20. They're down anywhere from 50, 80%. I think the poster child, I wrote about it last year, caught some flack from some mainstream media people, but I wrote about Cathie Wood being the future poster child for the bell that was being rung at top, that this person came out of nowhere, started to predict all these, over-the-counter stocks and things of that nature with PEs, that you needed to calculate it to add them up, and they were still going to go up thousands of percent. These things are down 50, 80, 90%, Lou. And people got to remember, when it falls 50%, it's not 50% that you needed to go back up just to be even. It's 100%.
That's right.
And so I think there's still, we might have seen in a very small section like that some of the worst, but I still think overall, I just don't think we're going to get the rebound and the use for people making single to double digit every year in the market going forward. Not certainly for as far as I can see.
There's so many uncertainties in the market too now that markets hate uncertainties, right? So is this peak inflation here, or is the worst yet to come? Will the Federal Reserve have the wherewithal and to raise interest rates to where they have to go? Last time we had inflation this high was 1980. I mean, if you calculate it correctly, like they used to calculate it, we're probably around 15 to 17% inflation, and many other goods are up even multiples of that. So the question is it going to get worse? Will the Federal Reserve raise interest rates to 10%? Because let's face it, 2% ain't going to do it. It's not enough to have any effect on inflation whatsoever. Could kill the markets, could kill real estate, could kill the economy. But I think the Fed's in a box. I mean, the Fed is damned if they do, damned if they don't. If they raise interest rates, they're going to kill the markets, they're going to kill the economy. If they don't, inflation runs rampant. So I think, predicting going forward is pretty hard because nobody knows what the inflation scenario is going to be. Like you said before, what the supply scenario is going to be. And what the economic scenario is going to be. We saw this last month, they announced the GDP, surprisingly down 1.4%. That surprised everybody. So we have a slowing economy right now, and the Fed's raising interest rates into that.
As we speak, we are not covering an issue to the extent that we should, and that is, why has China, which really, if people forget, we would have not made it through the last financial crisis, despite what the Fed did of quantitative easing and all, if China wasn't so strong and carried the world. They literally carried the world through the last one. Well, now, clearly they have to see that lockdowns weren't the answer to this pandemic. We've seen it, what happened around the world. We still had to go through, and people had to get, either get the disease or get the shots or whatever. Why they're doing this, and the way they're treating their people, literally locking them in, sealing them into their houses and all. And we see how much now most average Americans didn't realize until the pandemic hit how much we're dependent on other people and other places for things, none more than China. And now there's literally, China has come to a stop. I mean, literally, the biggest manufacturing area is there's nothing happening. There's things on you can find on the computer showing how many boats they're awaiting and stuff like that and all, and how that's going to impact everything. So when I hear Yellen, who's Treasury Secretary now, say, "Oh, the second half of this year, inflation will be back to 2% and all this," I mean that's just insanity. That should be hung. And one last thing, let me add this here. Most people won't care, but it's a pet peeve of mine. It's not ironic in my book that the market also topped when the Federal Reserves, after they were caught trading their own portfolios, and 3 of them had to resign, that since that time that they supposedly stopped being in the market has gone down. Coincident? I think it's more than that.
Talk about the ultimate insider trading. I mean, knowing what the Fed's going to do is, anybody on Wall Street would give their right arm to know that.
And they did. They traded their own account. There's no thing away around that. And it's just ironic that since that time, they haven't had the same incentive to be, feeding the market at this point.
All right. So the question now is, and what do you think is going to happen here? Does the Federal Reserve have the fortitude, and does the economy have the sustainability for them to raise interest rates enough to deal with inflation?
Well, here's the issue, Lou. Everybody refers back to the time 1980, Volcker, all of that. We were the world's largest credited nation then. We now have over $30 trillion in hard debt. That doesn't count what people are expected to get compensated in Medicare, Medicaid, and Social Security. If interest rates just go to 5%, let's just say that's where they average the next 5 years or what have you, and a lot of the debt, unfortunately, when interest rates were low, the government didn't go out and refloat the 30. They just kept putting 1 and 2 year out debt. So a lot of that debt's going to mature in the next few years. Put 5% on that $30 trillion, Lou. That's $1.5 trillion in interest expense. Lou, the best year the government ever had was, like it or not, when Trump in 2019, we did $3.3 trillion in revenue. That's what the government takes in. That's what they live off of. We're going to have almost half of our best year ever have to go just to pay interest. How do you pay for everything else?
And that's it. We're going to have to borrow the money to pay the interest.
Absolutely.
It's like borrowing money from one credit card to pay the minimum on another credit card. I mean, it's just going to go parabolic to that.
So all these people that talk about, this is just a bump in the road and everything's going to be hunky-dory again, I just don't see how it happens. I mean, a lot of people said to me these last few months, especially as these things started to work, and I don't know what they've said to you, but they said, Pete, I know you're right, but I hope you're wrong.
I hope we're wrong, too. Yeah. I've always said that when I talk about these things. But look, you don't have to be an economics PhD from Harvard to understand that a country that's in debt and a country that's in deficit cannot sustain a good economy for any length of time. And that's where we are right now. We're at the tipping point, I believe, in our debt situation. And that never historically unwinds itself nicely.
Well, that's it. And then there's the thing which becomes politically incorrect. But what I like about you, because I know you for 35 years, I could say what I'm about to say here and not have to worry about repercussions or not being invited back or anything like that. The untold story, more than that, Lou, is what's going to happen politically. Listen, you can talk, and I'm not going to talk about the past election or whatever that should be, but right now we have a president who's clearly having some difficulties functioning. And the likelihood is it's only going to get worse. And if that wasn't troubling enough, and forget what his policies are, just the fact of physically what is happening and mentally, if you look at what his person next in line has been like since she has become in that position, could you imagine, God forbid, something happened to him and that person had to take over? She is incapable of being the president of the United States because she's incapable of carrying herself. She can't function in anything that she has done. And I'm not saying this because she's a woman or the color of her skin. I'm simply saying it because she's the second in command. And can you imagine if you turned on the radio or heard something happen to our president that suddenly it was called President Harris? People have no idea how that is a legitimate possibility because of what we're seeing happening to Biden. He's having more difficulty functioning on a regular basis, irregardless of whatever you're not here to talk about. You want to talk about is fine. I'm not talking about just his. I don't imagine how that man can go 3 more years. I just don't.
I don't see it happening either. And I think that the Democratic establishment realizes what an albatross he is to them. But what's the alternative?
Well, see, they were so bent, right or wrong, to replace the guy that was in. I'm not here to go into whether that should have been or not. But they were so bent that not only was he questionable, and but they just thought she fit the mold to get elected, but no one thought, okay, after the fact, can she function and be the vice president? And it's clear and obvious. I don't know how anybody could defend her abilities or really her total lack of abilities. And that's something that's a legit concern. I don't, if you go forward and don't take that in consideration for the next couple of years, that we can get to that point, then I think that's a troubling mistake. Same as anybody that thinks geopolitically China is an ally and we should count on them to be there for us when we need them. I think that's a huge mistake as well.
Think about the leadership of the United States of America right now. And when you talk about the president, who has obvious cognitive issues, the vice president, who's in a job that she's totally unqualified for, and the Speaker of the House, Nancy Pelosi, 80-something years old, whatever she is, and she's not all there when she's even when she's sober, she's not all there. So these are the people that are running our country. We even have senators 80 years old. I hear Dianne Feinstein has mental issues. These people never go. They never retire. Maybe we need some new blood in government. But we have a very, I think, unstable political situation in the country. And getting back to financial markets don't like political instability in the country.
But also, Lou, you have to take now of what's happened during this time and how we're looking to the world on some of the decisions that have been made and the repercussions of what they've occurred. And why that's important is we can't fend for ourselves. We're dependent on foreign capital and foreign goods, all our strategic metals, everything that we need. We only seen it during the pandemic. When the pandemic hit, suddenly people realized, what do you mean my medicine comes from China? All these things. And if you think the Russian situation was bad, the real main play is going to be what's going to happen between China and the United States.
And it's pretty amazing that we allowed our manufacturing of vital supplies to be shipped off to a communist country that's not an ally of ours. It's a national security issue.
And it's both sides of the aisle, Lou. This wasn't one party or another.
Or one president or another.
Right.
It came down to corporations trying to make more money. And the way you make more money is you lower your employment costs. Overseas, you can get slave labor in countries that may not be friendly to the United States. And it was the bottom line. But now we have an issue, and it's coming to fore now as we're starting to see these supply chain issues. When you're too dependent on one country, now what happens if they invade Taiwan and we have a thing with them? They could just shut everything off and starve us to death. And shut off our medicines and our vitamins and everything else. So it's a pretty precarious situation. So we got to be very careful with how we react with China and other countries that we do business with.
And let me make one more point because this is very important. Almost 2/3 of Americans now are basically living paycheck to paycheck. Okay, so you have to understand, as much as we make gripe that, oh my God, gas, $4.20 the other day, this energy, just the energy cost, forgetting what food is happening in food, that people are paycheck to paycheck, they can't operate with that for that long, Lou. They don't have, that's why when the pandemic hit and they did this thing, suddenly we had to give away trillions of dollars because they didn't have $1,000 saved. 2/3 of Americans don't have $1,000 saved for emergencies, Lou. So now this inflation, which is not going away, this food crisis is going to be something that's going to last a lot longer. Energy, listen, we went from energy independent to energy dependent, and what's going to happen? What is that group going to do? The natural tendency in America now is, as soon as a problem, put your hand out to the government, and then there's a party that thinks you can just print money and put something in their hands to make them happy. And that's the issue that's coming down the road, Lou, and it isn't that far away.
That's it. Inflation squeezing the average family. As you say, 2/3 of Americans paycheck to paycheck. That means that any price increases in anything will cause them to go further in debt. And we're seeing that. We're starting to see credit card debt soaring again as all that stimulus money has been spent. People's savings have been spent. And now just to put food on a table and fill up your car, you're ripping out the Visa card.
And some people are going to get upset this time. I'm one of them, if I may just take this moment. I worked hard, and my daughter went to college, and I paid for her college, and I know people that borrowed and paid it back. And now we have people that want to just forgive that. It wasn't that those people that are being forgived got ripped off. It wasn't that they didn't get the education they were supposed to. That type of mentality is the next thing is going to be, well, what if we have this crisis that we just spoke about? Are we going to we're going to make the credit card companies forgive those people too? In the end, somebody has to pay for it. It's the people pulling the wagon. See, Lou, you and I were pulling the wagon. And we didn't mind that 10% or so people in the wagon had difficulties and all. We were good people. We were good stewards. We helped people. But now it's 20 or 30% in the wagon. And soon it may be 40%. And one of these days you and I are going to go, I don't want to pull the wagon anymore. And then what happens? And that's the other issue that we've had now is that government has become too big and too much involved. And we're not making people, in a sense, fend for ourselves like our parents and grandparents had to.
Yeah, it seems that now we're sounding like old men. The children these days, the kids these days, they've been indoctrinated to thinking that the state is their nanny, that they're going to take care of them from the time they're born until the time they die. And those type of socialist policies obviously have never worked and only winds up bankrupting the nation. Ask the Soviet Union, you can go
through South America,
Venezuela.
And 70s.
Yeah, it doesn't work. So socialism is doomed to fail, and unfortunately, that's the path we're going down. All right, let's take a short break, Peter. We're talking with Peter Grandich, good friend of mine and market strategist and somewhat of an economist and investor. We're going to take a break, and we'll be back on the other side. Welcome back to a special recorded edition of The Financial Physician. Lou Scatigna here, certified financial planner and your money doctor, each and every Sunday, 6 to 8 a.m. live at 92.7 WOBM or anytime on the podcast at thefinancialphysician.com. If you're just tuning in, you're going to definitely want to go to the podcast because I'm having a great interview with a good buddy of mine and smart guy when it comes to markets and the economy, Peter Grandich. Again, thanks for joining us today.
Always a pleasure, Lou, and really just I'm so happy that we have this chance, now and then to have this talk. I realized that, when we thought we were smart 35 years ago when we first met and all, but what we know now and what we know then is a dramatic difference. And by the way, that's one of the problems that I talked before we went to break is there's a lot of inexperience out there that people are dependent during perhaps what could be the toughest time in modern era for financial markets.
And I always like to say when you're on that the reason I'm sitting here right now in front of a microphone is because you got me involved in television and at the beginning. And I got to say, before you groomed me into media a little bit, I was deathly afraid of talking to a group, let alone getting on a television show or a radio show. And you helped me to get through that early on in my broadcast career, and that's the reason I'm here now. So I have to thank you for that.
Well, I'm glad to hear that. But, Lou, I have not seen the royalty check yet. So.
Well, once I start getting paid, I'll start giving you a piece down the line. But no, I'm totally honest about that. It's because we met at that time of my life that I became fearful of public speaking to thriving at it, and just give me a microphone and try to get it away from me.
And I don't think people know what you do to prepare for your shows. I mean, I've seen it. This we're recording, we're just going back and forth. I don't think people realize what it takes, especially now that you're doing 2 hours. It was enough when you were doing an hour. So, bravo for, at this time of your life, still willing to take the time to do that, to bring really good information to your listeners. I really commend you for that.
Well, I appreciate that. And, this show is different than most radio programs. So we try to bring information to our listeners that they're not going to get elsewhere. We're not afraid to talk about subjects that might be a little bit toxic to some people and probably do offend a few people here or there. But, that's what free speech is all about. And we try to share what I consider to be truths about what's going on in the world and markets and everything else. And so we were talking before the break. I guess we were talking about China and how important it is. And I've been telling our listeners for weeks now that you haven't seen nothing yet as far as the supply chain issues go. We're going to see shortages. We're going to see empty shelves. We have to, because Shanghai shut down. I mean, there's nobody loading ships or producing. I mean, it's just a shutdown. Now, some people are saying, and you got to scratch your head on this, what is China doing? They have 3 positive cases of COVID, and they shut down a whole city. And like you said, I mean, I've seen the videos of people screaming out their houses at night because they're starving to death in there. People are going nuts over there. But why are they doing it? They're destroying their economy. Are they trying to destroy the Western economy?
See, I don't think they're, first of all, they're insensitive to the human causes versus we as Americans and in the Western world. I mean, that's just a fact of life. They just, the power and leaders there are not going to be concerned as human beings as we would be here, no matter what party was in charge. So that's the first thing that, in the sense that they got going for them, that they could do something like that. I'm in the camp that it's not over the COVID. I'm in the camp that this has been a decision by them, that they saw us on the ropes. They saw this Russian thing come about, and they see the Western world, particularly America, which is its number one nemesis. That's what it is. And they see us on the ropes, and they're willing to sacrifice life and limb, so to speak, to maybe give either a knockout punch or really bring us to our knees and so forth and so on. There's no reasoning after what you saw, what COVID is and what the net results and percentages and all around, to keep doing what they were doing just for the sake of COVID. So the only other method, realistically, is that they're willing to get hurt to make us terminally hurt. And it's doing the trick. And
that's why I said before, by offloading our manufacturing to China was a national security issue. I've been saying it for years on this program, that sooner or later this is going to come back to haunt us. And now they're pulling the string on us, and we are so dependent. And we're going to learn in the months and years to come how dependent we are on China. And we're going to see that in higher inflation. We're going to see, one thing is, if you have to pay more to get something is one thing. But if you can't get it at any price, that's a bigger problem.
So, Lou, in my business that still exists, I deal with a lot of business owners throughout the United States. In fact, most of my clientele is outside the state of New Jersey. And almost no matter what the business is right now, they all talk about two things: shortage of people, but even worse than that, parts, service, what have you. In other words, I know a very large building company. Normally, they buy 1,000 refrigerators at a time because they build 1,000 homes in one particular area. What used to be 6 weeks, they're now told 6 months, and that's because they buy 1,000 from them. And why is that so? Because the people that are making the refrigerators can't get certain parts, and if it's not parts, it's metals. One of the things that almost no one knew, including the Don't Worry, Be Happy crowd on Wall Street, is how important strategic metals, the things that make up our phones and all the things that come up with it, almost none of them come from the United States. Just don't. We just haven't looked for that for a lot of years. And a lot of it comes from areas of the world which are either hostile towards us or exactly not our best friends. So everybody's saying, the head of transportation secretary said, solve everything, get an EV car. That's easier said than done. And by the way, we're already having brownouts in California, can't keep the lights on and all that. And now you're going to say there's going to be more electric cars, but you're not doing anything to build up the power. And, Lou, I've heard a guy tell me privately in one of the big utility companies, he joked, but to stress how bad our system is, he said Thomas Edison installed some of the stuff that's still out there. I mean, it's very archaic. And these are all the issues that have been festering, again, from both sides. It wasn't just this current group that's there now that caused all this. And people have lived way beyond their means. They've lived not recognizing, and become very dependent on other people. And now they suddenly are going to find themselves. And the natural thing, as I said, is, see, Lou, that's why the far left, the progressives, have at least gotten a voice, because they simply say, take it from that person. Those people have too much. Listen, that's basically what Hitler did. He convinced people who probably might have not went that way to say the reason you suffered is because of that group over there. And that's why they've had a voice. Now, yes, hopefully the coming elections, which is going to be critical, what happens in November. Certainly if for some reason it doesn't change and it stays the way, then that's the death blow in my book. But even with the change in Congress, it still is the mentality of the average American right now is take my hand out. I expect the government to do something for me. Our parents and grandparents, listen, they didn't need that. They didn't need public storage. You look, every mile or two now, there's a public storage facility, right?
I'm guilty. I have one.
Okay. Yeah, but I'm just saying, think about it, right? Our homes, our dwellings are much bigger than our parents and grandparents lived in because we got used to all this stuff. George Carlin has a classic act about that, and it's worth watching. And so all of this stuff and all the things that we got used to, it's clearly not going to be made available to us for as far as the eye can see because of all the things we discussed and have yet to discuss and might not discuss today. And so that's why I say when you ask me, well, what's the market going to do and all, I think the sins of the past are not going to disappear in 6 months. It may take 6 years or a lifetime.
Or never. I mean, the way things are going. So tough times are here. Let's face it. And they're going to be here for some time. And markets don't do well in tough times.
Lou, and I go back to, do you remember when you got your license? I don't know if you remember going to your first traffic circle. I remember it. I was petrified. Well, that's what the typical financial advisor is facing now. These are people that have been groomed on a market that really just went one way. And they've captured the asset, so their idea is to try to hold on to the asset, and they just feel that, don't worry, it's going to come back. If we go another 6 to 12 months, even if the market doesn't go a lot further down but doesn't go back up, that's still going to cause issues for people because they become dependent on markets continuing to go up.
Another thing, too, and I'm seeing a lot of people who are retiring now. You know, baby boomers are retiring either voluntarily or involuntarily, 60 years old, 62. And I look at their 401ks. They've accumulated over $1 million, many of these people. But looking under the hood, I see them 85% stock market. You know, when you're 60 years old, that's totally inappropriate. And when the market breaks, as it is now, these people are giving away tons of their retirement money.
Lou, I live in a 55 over community in Freehold. And the question I always get when I run into people is they ask me about the stock, but they're not really interested in the stock. They're interested in the dividend. I've heard people there tell me, I don't care if the stock goes down 20%. I just hope they keep paying the dividend.
And that's absurd.
I'm living off the dividend. And I say, listen, if things are going to get tougher, one of the first things that are going to be cut back is dividends. That's the first thing companies do is to conserve cash. So you might be seeing that. You find these people that living off stock dividends because, listen, the Federal Reserve destroyed the fixed income market. When we were in the business 20 years ago and we turned bearish on the market, we went to the bond market. Person got 8%, Ginnie Mae, 7%. CDs, they used to pay you 8% and give you a toaster.
Right.
You know? So all those things now, they're just not readily available. And these are people that are going to expect the government to act in a way that it can no longer act anymore.
You know, it's funny. I often say on this program when I first started in the business, do you remember those gold passbook savings accounts, right? What was the interest rates you got on that? Do you remember? 5.25%, right? It never changed. It was always 5.25%. And I used to laugh at people when I'd see new clients and I said, what are you doing with so much money in a gold passbook saving account paying 5.25%? That's dead money, right? People would give their right arm right now to get a savings account with 5.25% just to show how things have changed. And, you know, the Federal Reserve has screwed everything up. I mean, their financial engineering that they did after the 2008 crash of keeping interest rates at zero, printing money like crazy, we always knew it would come back to haunt us. And sure we are now. We're looking at a major inflationary environment. The average family is falling out of the middle class. And it's all engineered by the Federal Reserve.
And we didn't touch, and I don't know what time's left and all, but we didn't talk about the social aspects of all of this and the change in culture. You know,
I want to talk about that, but I want to stay on the finances for 1 minute. One of the biggest things developments that happened in the last few months, and I think you'll agree with me, is oil starting to be traded in non-U.S. dollars. Mm-hmm. I mean, Russia, you know, we kicked them out of the SWIFT systems. They said, okay, we'll only take oil and we'll only sell oil in rubles. What happened? Their ruble shot up. It's higher now against the dollar than it was prior to the invasion. And then you got China now using yuan to buy oil from Saudi Arabia. This is chipping away at the petrodollar. And the reason why the dollar hasn't crashed and we haven't gotten into hyperinflation and we've been able to have budget deficits is because of the status of the petrodollar and the reserve currency of the dollar. That's in danger right now.
Serious danger. And one of the reasons the ruble came back was because the Russians in the last 10 years basically sold all their treasuries.
Yes.
And they put most of the money into gold. And then when they announced that their ruble was going to be backed by gold, the ruble shot right back up. And you're right. There's been already significant trading, but on a smaller scale among countries not using the world reserve dollar. I think it's going to be faster now because of what's happened, because if you're one of those countries that aren't exactly our best friends and you saw what we just did now and what we did to Russia, we cut them off at the knees, Why do you want to use the U.S. dollar as your reserve currency? They could do, if they did that to, this is the attitude they're going to have in the private room. Hey, if they did that to Russia, they could do that to us.
Well, we weaponized the dollar.
Right.
And who wants to deal with the currency that could be weaponized against you? So we shot ourselves in the foot with that sanction thing. And now let's talk about gold. Do you think gold would be flying up in this inflationary environment, the chipping away at the U.S. dollar? And I get emails all the time from gold investors. Lou, I mean, why isn't gold $3,000, $4,000 an ounce or silver? And the answer is manipulation, correct?
Well, let's take a step back. It's very important for people to understand what I'm about to say. It really is. You're the exception to the rule in the financial service business. Most people in the financial service business treat gold as kryptonite. They're just, even if it would clearly look good to them that they should own it, they won't, because even if they want to, the firm that they're working for doesn't want that involved in it, because it goes against basically financial assets. And we've been, until recently, in some of the greatest financial runs ever. Stocks and bonds, have done phenomenal. So that's the first reason. The second reason is it got competition. Now, I don't think it's deserving competition, but in the last few years, especially from younger people, they didn't run to gold when there was a problem. They ran to cryptocurrencies. And there's, I don't know how many coins there are now and all. Lou, if those coins weren't around, some of that money would have went into gold. That's an important thing that gold people have to accept. Now, I believe what happened with the internet stocks will happen and is happening. I believe Bitcoin's made its all-time high. But why I say this is there's still so many coins out there, and there has to be a shakeout. There's just not going to be that many. Even if you believe it will become a true financial medium, there just can't be that many. So there has to be a shakeout in that. So that also took away from what would be gone into gold. The other thing that happened with it is that people have really, until the last couple of months, they've been making double digits and things. So they weren't too concerned about this. Is all. We were first shocked with the pandemic. People did not realize how, what we just shared, how dependent we were on the world. The pandemic came. And then, we flooded again. We printed out all this money. And only in the last few months have we seen it. But don't take away the fact, Lou, that gold has still managed to do what it's supposed to do. Listen, it was just a few years ago at 1,300. It's now 1,800 and change. That's not bad for something that's supposed to just preserve your capital and liquidity. And second is, initially when interest rates rise, the standard thinking, oops, that's bad for gold. Is it really? No, because carrying costs, most people aren't storing gold in a place where they're paying a bank and all, but that's always the excuse. But once inflation's here, and there is this conclusion that you and I think, based on our discussion today, is that the stock market is not going to come roaring back. That's when gold will suddenly go from half cup empty to half full. And so I'm not too concerned unless you're a trader. I certainly believe if I had to buy something today and you said, Tara, Pete, I got Tara hidden. You want to come back here a year from now and see Tara alive. Do you want to buy stocks right now or you want to buy gold? I choose gold quickly, because even if it doesn't perform as well as I hope it will, it's not going to do still what I think the stock market can do, and that's go a lot lower. So I'm not too caught up. Yeah, we get, we know it's manipulated. We've seen it enough times. Listen, 10, 20 years ago, they claimed there was no manipulation. Now, since then, there's been a lot of cases. People have been found guilty. Look what they just did in the LME with nickel. That guy was short. He was beating longs up. Suddenly, the nickel price went up. What'd they do?
They bailed out.
They bailed the guy out. Now, that was the opposite. It was a bunch of retail people and the market collapsed. Do you think they'd be bailing out the individual longs? No. So we know there's manipulation. We can't get around that. I think will always be that way.
Yeah, but that just slows down the move, and more gradually. Look, if you believe that the U.S. dollar is going to lose purchasing power as it is now, then it'll take more dollars to buy a unit of anything, and gold is a universal money. You never have to. That's the thing about gold. You never have to convert it into U.S. dollars. You can buy Swiss francs with it. So if the dollar falls out of bed, people say, well, you're going to get useless dollars for it. No, I won't. I can get Swiss francs, or I can get yen, or I can get euros, or whatever for that. All right, we only have a few minutes left. Let's talk about the social aspects that you were bringing up, that the country, not only are we going down financially and economically, but socially and culturally. And I know this is a big issue for you because you talk about it a lot.
So, yeah, it has become, first, so to be completely blunt, and so anybody that knows me is it all starts at, for whatever reason, whether you want to say, and there was fault like in anything, but for about 200 or so years, this country ran on the basis of what the founding fathers built, and that was a system based on the Judeo-Christian way of things. It was in our law, it was in our schools, it was in everything. And was it a perfect country? No, but it was always still the best country anywhere in the world. And as we moved away from that, and as we gotten away from that, we got into things, relativism, socialism, anything that's not of a God-fearing nature. And so I personally don't think that's a coincidence. Okay. Second of all, as we discussed earlier, we've become a society that's become more dependent on government. And that's the socialism type of a way of doing things. And socialism, there's no spirituality in socialism. Government is God and acts like it's God. But we see now, even in most recent days, finally, like them or not, us come out and said, hey, listen, Twitter's got, you can't have it all one-sided. You can't have what was the former president of the United States on, but the guy running Iran and all can still tweet. I mean, either do both or don't do it all, okay? And now they're freaking out because the guy's kind of taken away the one-sided punch bowl. I mean, that's all he's talked about. He's not talked about kicking the left out. He's just saying we got to let the right in with the left.
But the left don't want that because they want to monopolize the conversation.
Because it's been that way. Look, Lou. It's been run. It's not going to change. The mainstream media believes in a certain way. It's controlled. The technology on different was now 3 or 4 big groups really influenced 80 to 90% of what people were hearing. And so that is the biggest challenge. Now, I'm sure if there's a change in Congress, that might be slowed down, but I don't know if it can be reversed. And without it being reversed, people live under false pretenses because the media doesn't allow certain things. And by the way, there comes a point in time where even with manipulation and all, like you just said, you can't overcome it. I think the cases with the Bidens, particularly with the son and all, especially if the Republicans win, is going to move to the forefront, even if the mainstream media doesn't want to cover it. And if that's the case and more of that stuff comes out, then we revert back to what you and I spoke about what that would mean if, Biden, whatever, can't be president and all. And that in itself is almost where I can see that what I call the don't worry, be happy crowd on Wall Street going, no, let's live with that because it would kill the market. The market has been, you talked about how people were struggling, but there's been a small percentage right at the top of the pyramid that's done phenomenal.
Yeah, and that's it. Everything that the Fed has done over the years with the low interest rates was wealth redistribution. Let's face it. The money was taken out of conservative investors, retired people's income by taking the interest rates away, and then the money went to the stock market and made the 90% stocks are owned by the top 10% of people, made them incredibly wealthy and at the expense of everybody else.
Well, when Bernanke introduced right after the financial crisis, Obama, if you remember, it was quantitative easing was only going to be once, and it was going to be mainly into building infrastructure and all that stuff. And the money would first go to Wall Street because they bailed out the banks, but then it would get to Main Street. It never got to Main Street, Lou.
And it's not going to. Peter Grandich, always great to have you on. We could do a full 2 hours with just you. Always an interesting conversation. Thanks so much for joining us. You have a website or people get in touch with you?
PeterGrandich.com, but please send me my royalty check already, will you?
I'll do that. All right, end of a recorded show for you while I'm away on vacation. Be back live with you next week. My website is thefinancialphysician.com. If you missed any of the program, go to the podcast. My email is lou@thefinancialphysician.com, lou@thefinancialphysician.com. And my office number is 732-905-8100, 732-905-8100. Have a wonderful week, and please join me next Sunday and every Sunday for the next edition of The Financial Physician.